Do you know the two methods of depreciating non-current assets?
Straight line method and reducing balance method.
And there is one more method. What is that one more method?
Diminishing method. I am back.
No, not diminishing method. One is
Then?
straight line method. One is reducing balance method. Reducing balance method is also called diminishing value method.
Oh.
What is the other method? The other method is devaluation method. Devaluation method, that means you have many small non-current assets of small values. So you cannot apply a method of depreciation on each and every small item. So you group them together. You call them, like, for example, loose tools, and you say the approximate value of this is this much. So you value them as per your estimation. This happens with nails, screwdrivers, hammer in a carpentry business. Okay?
Okay.
In straight line method, you charge depreciation on costs. Okay, here the amount, rate of depreciation always remains the same. Amount of depreciation, rate of depreciation always remains the same. In reducing balance method,
On assets.
you will charge depreciation on the reduced value. Which value you will charge depreciation?
Reduced value.
Reduced value. So suppose you have the cost. From that you will minus depreciation. What reduced value is called what? Net book value. What is the reduced value called?
Net book value.
Net book value.
Then you charge depreciation on the net book value. So this is depreciation of the first year. This would be depreciation of the second year. Second year, your net book value will reduce again. And then again you will charge depreciation. So in reducing balance method, the rate of depreciation remains the same, but the amount of depreciation goes on reducing. I hope am I clear?
Yes.
Yeah.
Come on, start with the first one.
That was the first in 20,000.
First year depreciation is 4,000. Do you agree?
Yes.
Yes.
Miss, then
So
we'll do 20 minus 4,000. Yeah, okay, 16,000. Then we'll take 16,000 20%, which is 3,200.
3,200.
What is the net book value at the end of the second year?
12,800.
Okay. What do they
Then
want?
16,000 minus 12,800.
What do they want?
The charge, the last of the second year, 3,200 A.
Yeah. The charge of depreciation at the end of the second year. What is the charge of the depreciation at the end of second year? 3,200.
3,200.
Now please be very careful about the questions they ask. They can ask you total depreciations at the end of the second year. What is the total depreciation at the end of the second year?
7,200.
200. They can ask you the net book value at the end of the second year. Then this will be the amount. Charge of depreciation at the end of the second year. Then this is the amount. The net book value at the beginning of the second year. What is the net book value at the beginning of the second
16.
year?
Okay, big.
So be very careful on what question they are asking you. Okay? Come on. Read this, try doing it. Now look over here. Machine is bought 2 years ago for 20,000. That means in year one the cost was 20,000. Depreciation is 10% on cost. That means depreciation amount rate will always remain the same. Okay? So 10,000 depreciation in the first year. No, 10%, sorry. 2,000 depreciation in the first year. Net book value will be 18,000. Do you all agree to me?
Yeah.
Yes, yes.
Year 2, 18,000 would be the net book value. Depreciation amount would remain the same. It would be on cost because it is straight line method.
Okay.
Otherwise, I charge depreciation on this amount, but here I will charge depreciation on this amount. Are you with
Yeah.
me?
Yeah.
So the net book value is how much?
16,000.
16,000.
1,000. Okay. This is end of year 2. Do you all
Yeah.
agree? End of year 2. This is the net book value at the end of year 2, and it is sold for how much?
Sold for 13,000.
It is sold for 13,000. Okay. Now my all working is done. You will not have more working than this. But make sure that you do the working.
Okay.
What is the balance on the provision for depreciation of plant and machinery account after this sale? So the sale is done. Okay, what is the accumulated
2,000.
depreciation of this asset?
3,000.
2,000.
Total. Total
4,000.
depreciation is how much? 4,000. Okay. Balance of the provision for depreciation account before sale. Provision for depreciation account had a balance of how much? 28,000 before sale. You sold this asset.
For
You sold
13,000.
this asset. Right?
Yeah.
So you will remove the depreciation of assets sold. You
Okay.
will remove the depreciation of assets sold
from the
total
provision.
depreciation. So the balance on the provision for depreciation account after this sale would be 24,000.
Okay.
It is very necessary to understand the question. Okay?
Okay.
What is provision for depreciation account? It is accumulated depreciation. Provision for depreciation account has accumulated depreciation. Accumulated depreciation means what? Total
Means total, yeah.
depreciation of all the remaining assets that you have. Okay?
Okay. 5,000. 2,000. Annual depreciation.
Then 2000 divided by original price, that is 20,000, multiply by 100.
Then
10%. What is the main purpose of charging?
omit answer.
What is the main purpose of charging depreciation? Hmm. s- To spread the cost of an asset over its useful life.
For me, I also find C as the correct answer. Even D is the correct answer. But then when there are more than one correct answer, the most closest correct answer would be the appropriate answer. Okay, so just memorize this. What is the main purpose of charging depreciation?
To spread the cost of an asset over its useful life.
Over its estimated useful life. Okay.
Yes.
First January, machine is bought for 12,800.
12,800.
Two methods of depreciating the machine being considered as follows: straight line method and reducing balance method. How will the net profit be affected if reducing balance method is used rather than straight line method? Okay. So in straight line method, what is
Yes.
how we do the
In
depreciation?
straight line method, the cost amount and the rates remains the same.
Yeah, so 12,800 minus 2,800 divided by 4. What will be the annual depreciation?
2,500.
Yeah. Annual depreciation would be 2,500. So how will the net profit be affected if reducing balance method is used rather than straight line method? Come on, let's see. Straight line method. Year one,
It
depreciation.
will be increased.
Reducing balance method. What would be the depreciation of year one?
2,500.
No, 12,800 into 30%, right?
Yeah. Right.
3840.
3840. What is the difference?
1340.
1340. So if I charge by straight line method depreciation, that means my expense would be under cost and profit would be more. Yes.
Overcast. Yeah.
What do they want us to find out? How will the net profit be affected? If I charge by reducing balance method, that means my expense will be more by 1340 and my
And your
profit
profit
will
will be
be
less by
less or it
1340.
would be decreased by 1340. Yes?
Yes.
Hmm. Am I clear?
Yeah.
Yes.
Come on, try this.
Ma'am, B 3,800.
Mm, who made
We will
that?
write this. Yes.
Yeah, you got each correct. What about Arman?
If
Yeah. Same.
Same? Okay, fine. Come on, go to the seventh one. Sale made no profit, no loss means what?
same price.
Sold at net book
Mm,
value.
Option D 16,000. 20% of 20,000 4,000. Subtract
How much did
16,000.
you sell?
No, missed it. But it's asking
Sec.
for 2 years. So we'll write 1280. C.
Okay.
Twelve
You
thousand
sold
eight
it
hundred.
after 2 years.
2 years. Yeah.
After 2 years, the net book value is how much?
12,800.
12,800. So the answer would be option C. Come on. What is the net book value at the end of year 3? Year 3 means I have charged depreciation for year 1. I have charged depreciation for year 2. I have charged depreciation for year 3. It's straight line method, so it is very
So miss,
easy.
we can just simply write like we'll find 25% of 100,000, which is 25,000. So we know in straight line method the depreciation would stay the same.
Yeah. You don't need any writing. You just need the answer. So I do that big method only when there is reducing balance method. But if there is lack of understanding, it is better to do a big method and get the correct answer. Okay. So the option is B. Can I move ahead?
Yeah.
Yes.
Okay. Cost of computers is 100,000. Depreciation for 3 years is this much. So the net book value after 3 years is 25,000. Go on the ninth one. Very easy. So when you have to find the profit or loss on disposal, what are the two things that you compare? When you have to find the profit
The
or
net
loss
book
on
value and how
disposal,
much it is sold for.
you compare the net book value with the selling price. They've given you both. Net book value is 3,000. Selling price is 4,800. So What is the profit or loss on disposal?
uh,
You have
1,800.
1,800 profit. A book, a asset of 3,000 sold for 4,800.
Yeah,
Value 3,000 sold for 4,800. So what have you made?
1,800 profit.
So you have made 1,800 profit on disposal. Are you with me?
Yeah,
So when you have to find the profit or loss on disposal, what do you compare?
the net book value and how much it is sold for.
The net book value with the selling price. Come on, go to the 10th one.
On cost.
On cost. Straight line method means on cost. Come on, next one. Be very careful about the question that they ask.
Miss A, 11,250.
60,000, 25% is how much?
Wait, I'll calculate it.
15,000.
Hmm.
Net book value will be 45,000.
And at the
Second
end
year,
of
it's
year
a
two,
11,250.
yeah. So they want at the end of year two. A. Okay.
Yeah.
Come on, next one. They want net book value, no? At the end of year two.
Miss C, 22400.
So they want the net book value at the end of year two.
Miss it is 2240.
Hmm. Okay.
Yeah.
Calculation
Yes.
here. For reducing balance method, always do this box and then read the question and come up to your answer. Come on, 13. Cost is how much? 12,600.
12,600.
Accumulated depreciation is given to us, that is 7,400.
7,400.
So what will be the net book value?
5,200.
5,200. How much you're selling for?
3,750.
Of item of value 5,200 is sold for 3,750.
1450 debit.
Loss or profit?
Mm.
Loss. Debit all expenses
Loss.
and losses. So 1,450 debit. Come on, go to the next one. What is the formula for This depreciation
Miss, the
cost
cost minus the estimated depreciation divided by the
minus
scrap value.
scrap. Cost
Yeah,
minus
divided by the number of years.
estimated useful life. So it is cost minus scrap divided by the estimated useful life. Annual depreciation will be 2000. I hope this is
2000.
clear.
Yeah.
Go to the next one. They want for year 2 now. You need to be very careful when you're answering.
Miss, H is greater, 100 greater than H. H is 100 greater than G. For G it is 1500, and for H it is 1600 for second year. Miss, why you took 1500? It is 20% for reducing balance method. Miss, for reducing balance method it is 20%. So it will be 2000.
Oh, it is 20%.
2000.
So this will become
8000.
then this will become 1600.
1000. Yeah.
So what will this be?
B 100 greater for H.
How much?
B 100 greater for H.
Difference in depreciation charge. So depreciation charge is 100 greater for H. Okay, fine. And the provision for depreciation is 23,000. Depreciation is calculated 20% on cost. After the balance sheet is prepared, it is found that machinery repairs costing 2,000 has been debited to machinery account. That means they found out that there was 2,000 repairs which is included over here. So the original cost of the machinery should have been 50,000. What should be the corrected balance on the provision for depreciation account? Okay. 2,000 rupees extra was added to the machinery. Yes or no?
Yes.
Yes.
So what is 20% of 2,000?
20%. 400.
Okay. So 20% extra was included over here.
Mhm.
Yes.
Okay. 20%
Mm.
extra depreciation was included over here. Extra depreciation on the extra value. What was the extra value? 2000. Yeah.
Yeah.
So 400 extra was included over here.
Mhm.
Okay. So we subtract
Remove that
400 from
400.
that.
So what will be the amount?
20 to 600.
20 to 600. Understood?
Yeah.
Yes.
The extra cost removed from the cost, and on that extra amount, whatever is the depreciation you have calculated, remove it from the provision for depreciation. So you can get new net book value, new cost, new provision for depreciation, anything. Am I clear?
Yes.
Let's go ahead. How are non-current assets normally shown in the balance sheet?
Net book value. A.
Yeah, at net book value. How is the balance in the provision for depreciation account shown in the financial statements?
Miss, it is added A.
No. The provision for
Then
depreciation account, if you remember, you have three columns in the non-current asset.
yeah.
First is the costs,
Then the net book
the
value and
provision for
depreciation.
depreciation, and then the net book value. From the
Mhm.
costs, you subtract the provisions and then you get the net book value.
Okay.
Yeah. So it is
Yeah.
deducted
So B,
from the
current asset,
current
non-current
assets in the
assets.
balance sheet. Come on, try this. Which years?
Second. Yes, I hate this question.
No.
Making it lengthy. Compare.
Second year depreciation for X would be how
We're
much?
asking for both for X and Y.
But
They gave
for,
us reducing balance method too.
for Y, for Y we will have to do both
Y
ways.
calculating.
Okay. So it would
Yeah.
be 20,000,
Into 40.
40%,
8,000.
12, 12,000,
4,800.
4,800.
Yeah.
So second year
So
depreciation is 4,800. So second year
D
depreciation for, no, they want X. So X is how much?
less
X is 8,000
AC
less, 800
800.
less, 800 less for X. Are you all with me?
Yes.
1 minute. How much will the second year's depreciation charged by X differ from that charged by Y? X has charged 800 less. Y has charged $800 more. Second year's depreciation charged by X. Second year depreciation charged by X. This is 800 less. Differ from that charged by Y. Why they've said D? Okay, this is X ka value and this is Y ka value. I just swapped the names. X is charging on reducing balance method and Y is charging on straight line method. So X has charged 800 more. Okay? Are you all with
Okay.
me?
Yeah, yeah.
Come on, do the 20th one. Cost was 8,000. Accumulated
Is
depreciation
900 profit?
6,900. So net book value is how much? How much is the net book value?
1100. It's
1,100.
1001.
How much is it sold for?
900.
900. Okay. Book value 100, sold for 900. That means you have a
Loss of
200 profit.
200.
No, I lost miss. Okay,
200
okay,
loss.
yeah, yeah. Okay,
Understood?
yeah.
Yes.
Go to the next one.
The beginning of financial year 20 cost 10 20,000. So machine had a net book value of 6,000.
Hmm. Old machinery had a net book value of how much? 6,000. He has part exchange. Part exchange, you can say, or you can say, when you part exchange your machinery, the value that you get is the amount that you have sold it for. So I can
Mm-hmm.
say he has sold it for how much? 5,000.
6,000, 5,000.
Net book value 6,000, sold it for
Yeah, for
5,000.
5,000.
So what would be the loss?
1,000.
1,000. So 1,000 is the loss, that is for sure. Where will this loss on sale go?
Loss of income statement.
The loss on the sale of asset will go in the income statement. Very well. Okay, fine. Now you have bought the new machinery for 20,000.
Yes.
Okay. And on this new machinery, you will also charge 20% depreciation.
4,000.
You will also charge 20% depreciation, 4,000. So what is the total amount that will go in the income statement?
5,000.
So
5,000.
depreciation will also go in income statement. So the total amount that could go in the income statement is 5,000. Normally, people forget to charge the depreciation on the asset purchase. Okay? Good
Okay.
one. Why does a business provide for depreciation on non-current assets? Depreciation, which
Miss, we
principle?
can write both C and D.
Depreciation, which principle did I teach you? This is not net realizable value. We show the asset at net book value.
Okay,
Okay. Net
okay,
realizable value means the selling price, and net book value means costs minus depreciation.
okay.
Why do we provide for depreciation? Matching principal. Okay.
The total debit
Matching
expense is
principal
equal
for
to total income.
depreciation. For depreciation, provision for bad and doubtful debts, outstanding and prepaids. Okay.
Mhm.
Let's go to the next one. For which category of non-current assets is revaluation method used? Just remember, revaluation means loose tools. Okay,
Okay.
come on, do this.
Yes.
Cost of machinery is 10,000. You depreciate for 3 years 20%. Straight line method.
6,000.
So you get the book value as 4,000. From that, you compare it with the selling price. So you got loss on
1,000.
disposal. Where will this loss on disposal go?
Uh, Statement of balance sheet.
No, in the income statement under other expenses.
Okay.
Loss on disposal of non-current asset, income statement under other expense, other expenses. Come on, try this one. Be mindful. He wants total amount of depreciation. He wants total amount of depreciation for the first 2 years. How much will it be? Are you all with me?
Yes, miss.
That will be 1800. Okay.
Okay.
Come on, go to the next one. How much is charged to income statement for depreciation for the year ended 31st December 2003? Okay. What was the opening value of loose tools? Loose tools?
Miss, answer is 120C.
Okay.
We
Loose
take 1,100. Sorry,
1000.
1,000. Use the loose tool plus 20, then minus the value of tools held.
Okay.
120.
So opening value of 2003 plus purchases minus the closing value. So 1020 minus 900. So 120. 120 is the depreciation charge. Opening plus purchase minus closing. Go to the next one.
No, why 800? Okay.
What is the net book value? At 31st December 2003.
Option C, 10,750.
Yeah. You see what happened over here?
Let's see.
Sorry.
I think so. It should be C.
Hmm. What happened over here? 2003, they
In
had
2004, miss.
equipment
We
and provision
took
for
it.
depreciation.
Okay.
They purchased equipment of another 12,000 and it is straight line method. So what will be the current year depreciation? It would be 18,000 plus 12,000, the total equipments, that is 30,000 into 25%. So 7,500 would be the current year's depreciation. Are you with me? They
Yes.
want the total provision of depreciation. What do they want? They want
Total
the
provision
total
for
provision for depreciation. That means you add both of this. So the total provision for depreciation would be 14,500. Okay. Equipment was costing 20,000. It was purchased in 2005. Useful life 5 years, residual value 3,000. Depreciation was straight line method. It was included in the income statement for 31st December 2005. That means only 1 year, right?
yes.
3,000
Yes.
cost minus residual value upon estimated useful life. So this is 17,000 divided by 5. So annual
Mm,
depreciation is how much?
17,000 divided by 5.
So annual depreciation is 3,400.
Yes.
Okay. So
Okay.
3,400 annual depreciation is included in the income statement every year. It was then found that instead of this, he should use reducing balance method 30%. So instead of charging depreciation of 3,400, he should have used reducing balance method 20,000 into 30%, 6,000. And he should have put 6,000 in the income statement. How will this error affect the net profit? Okay. How will this affect the net profit? Now over here, what did he do? He has understated the expense, so profit will be overstated. Now this error, because of this error, profit is what? Overstated by how much? What is the difference? Profit is overstated by 2,600. Please see, relate and then tell me. How is
Miss,
loss on
income
sale of
statement will be
non-current assets?
debited and disposal will be credited.
Income statement will be debited and disposal will be credited. So for all expenses and losses, income statement is debited. And for all income and gains, income statement is credited. Okay, fine. Try this one. Effects on financial statements of providing depreciation. Expense will increase. That is first one.
Miss, okay.
So it was A or C.
Miss C.
Balance sheet non-current assets.
It will decrease.
It will decrease.
C.
Value will decrease. So it's C. Now this I think profit or loss on disposal is very clear with us. Here. Come on, do this one. What is the journal entry to record depreciation?
Miss A. A income statement debit provision credit.
Provision for depreciation.
Yeah.
Remember that. I think this is also okay. Try this one.
Let's see.
By C.
The current asset will be overstated by 1,800. Disposal will the profit. It will also be overstated by 200, and the non-current asset, the computer, it will be understated by 2,000.
She sold a computer with net book value 2000 for 1800. Cash was received, but no interest was made. Because she sold the computer, so the non-current assets would decrease by 2000 for any of these two. And she received the cash. Cash received. That means current assets would increase and she would receive only 1800. Answer C. Okay? Because computer went out, so non-current asset would decrease. So answer would be C or D. And cash received. So current asset would increase by 1800. Are you with me?
Yeah.
Yes.
What is depreciation?
Depreciation. Asset.
Yeah, yeah, come to
Uh,
top page.
okay.
Hmm.
Miss, it is a system of matching the benefit of using non-current asset with cost. D.
Hmm.
D. D.
Okay. Come on, next one. What is the reason for charging depreciation?
Miss, to charge the cost of using an asset against income. B.
This is which principle?
Matching.
Matching
Matching.
principle. What would occur using reducing balance method of depreciation? Depreciation charge in year 2 would be less. In reducing balance method of depreciation, the amount of depreciation changes every year. And the amount of depreciation reduces every year. Yes? So the answer
Yeah.
would be what?
Uh, Miss, it will be B.
B. So in reducing balance method, every year the amount of depreciation keeps on reducing. Okay. Come on, let's understand this format of the provision for depreciation account. What does this mean?
What? What, Miss?
What does this amount mean?
Opening balance.
Opening balance will be balance BD. What does this amount mean?
The depreciation, the provision that is transferred to income statement.
This means depreciation charge for the current year. If income statement is debited, provision for depreciation is credited. That means depreciation charge for the current year. Then this same depreciation we bring over here. So this is opening balance. What does this mean? What does this mean? This will also mean depreciation charge for 2012. Yeah, are you all with
Yes.
me? Okay. Then we will add both of this. We will write over here. And in 2013, this is accumulated depreciation. What is this? Accumulated depreciation up to 2012. What do they want? What does $5,100 on 1st January represent? Read and tell me what does 5,100 on
Closing balance.
come on, tell me what does it mean? This means accumulated depreciation using reducing balance method. In reducing balance method, the amount of depreciation reduces. So is the amount of depreciation per year reducing check? First year it was 3,000. Second year it was 2,100. So this would mean accumulated depreciation using reducing balance method. Are you all with me?
Yes, okay.
It would
Yeah.
not mean net book value because we are in which account? We are in the depreciation account. Okay, this I think you all will do it. Which statement about depreciation is correct? In reducing balance method, amount of depreciation increases or decreases? In reducing balance method, amount of depreciation increases or decreases?
Decreases.
Decreases. So increases is not. In straight line method, residual value can never fall to zero. It can fall, right?
Yes.
In straight line or diminishing balance method, both are suitable for loose tools.
No.
For loose tools, which method is suitable?
Reducing balance.
For loose tools, revaluation is suitable. Straight line balance method can both use percentage rate. This is correct. They can both use percentage rate. So we are done. Just do this last question on depreciation over.
0. 2560.
2560. So net book value of the machinery disposed of during the year 2015 was 2560. Okay? And no depreciation is charged in the year of disposal. That means in this year, no depreciation. In 2015, no depreciation is charged.
Okay.
This is the net book value of all your machinery in 2014. So
Okay.
from this, if I subtract net book value of machine disposed of, so in 2015, I will get net book value of remaining assets.
So 36,000 minus 2,560.
Yeah,
That will be 33,440.
33,440. Now, these are my remaining assets. Remaining assets and the net book value of the remaining assets. 20% on reducing balance method.
So 20% of this amount.
Yeah, in reducing balance method, you charge depreciation on the net book value.
6688.
6688.